I was never a Starby fan. Today, folks, welcome back to Crap Tank Mode. Yeah, the markets are tanking, baby. It's back to this really weird interest-raised environment where we're going to talk about what it's doing to the market. We're going to talk about earnings because there are some exceptions. Shopify. We're going to talk about these banks, what's going on with the Canadian banks specifically, my high hopes for them, hopefully, in the near-term future while regional banks go bust. This is going to be a fun, intriguing conversation as the turmoil never ceases to amaze me. It's always a fascinating day in the markets, but I'm going to shout out a little bit of a congratulations here to Vic Gill, because if I had a few more cojones, I would have done what you did here, and I discussed it, and he says, I did it, Kyle. Played Shopify for a quick 20%. Your idea, my risk, responsibility, my reward. Yeah, so I was really intrigued to play Shopify and just do a short-term swing trade on it because Facebook, these companies that did all these employee layoffs that are just fighting to get back to positive earnings or just posting EPS, and they did it. I mean, a lot of them have done it, and their stocks popped dramatically. Now, my problem is in my head, I'm like, I make so much at my job. For the first time in my life, I make six figures a year, and I just don't see the point in risking anything in an insane amount of stock investments like I did in the past, because in the past I didn't make much more than 40 or 50 grand a year, so I took on the risk of the markets to make up for the lack of returns I was making from my job. But now my job is like the market for me, so I'm just buying these index funds mostly. But congrats, because Shopify, man oh man, a quick return here. I mean, about 5 days, it's up 25% here. It popped dramatically on earnings, so we'll break this down briefly before we talk about the broader market, because Shopify is a great company. It's just confusing when you look at their earnings because they're still spending a lot of money, right? But this company is a growth beast, and it's Canada's growth beast. It should be, it could potentially go back to being one of Canada's largest companies. I mean, when you go look at that old stock price there when it was sitting up at the whopping $170 range, still down 65%. I mean, from here, this was when it was worth, almost $200 billion plus dollars. We're going to get back there. I have faith in Shopify because look at the growth on this sucker. From 2022 to 2023 for this first quarter, subscriptions grew pretty dramatically from 345 to 382. Merchant solutions 859 to 1.1 billion. In total, 1.2 billion to 1.5 billion dollars, baby. I mean, they're just crushing it. That's pretty exceptional growth, right? And if we take a look, gross profit did really well. We can see their sales and marketing. They did a bit of cutting here. They were paying Mr. Beast. I guess they stopped paying Mr. Beast to promote Shopify. But nonetheless, they did post a basic earnings of 0.05 cents, whereas last year it was $1.17. And they are still diluting slightly. But what an intriguing play. And congrats to anybody that did pick up shares in it. I still think the company, again, is fairly overvalued. But again, so long as they keep posting this revenue and these growth numbers, I mean, from the October lows, it's now up 125%. I wouldn't be surprised if this upward trend continues. But that's tech stocks, right? They got hammered so hard that they're just starting to rally back nicely. So it's well deserved at this point. We'll talk about Apple and some tech companies toward the end of this because Apple's earnings are tonight. But TD, I want to shout out these big banks because, man, oh man, the bank sector has been getting riled up. And I think there's a huge buying opportunity still in large cap banks. JP Morgan, all these companies are still doing some acquisitions. TD couldn't get away with theirs. I know Royal Bank is still closing on HSBC, the Canadian counterpart of that. But TD stepped away from First Horizon. And look at this, where TD announced the purchase of First Horizon, it jumped 30%. And then where TD said we're not buying First Horizon, and it dropped 50%. So yeah, First Horizon is getting absolutely clobbered here. And if they purchased this, it would have made them the sixth largest bank, I think, in the U.S. for being a Canadian bank primarily. But again, I think all these banks, man, when it comes to the mega cap guys, they have the liquidity. I don't think they're going to experience any major bank runs, though I do not recommend putting all your money in any individual bank. I've talked about this before because obviously if banks dissolve, they only have insurance limits here in Canada, I think up to the first 100,000 or something like that in cash. But if you own TFSAs, RSPs, and stocks, those are own shares. So if the bank actually went under, you're not going to lose your shares. You'll actually get those paid. It's primarily just cash sitting around, right? So for me personally, as mentioned, me and my fiance, we use 3 different bank accounts. We use TD, we use Royal Bank, and we use Bank of Nova Scotia. And personally, I love me some Bank of Nova Scotia. Bank of Nova Scotia right now, I think, is a great buying opportunity here. $80 billion market cap, 6.3% yield. I've been debating this, and I'd love to know what you guys think about it. Of just because my emergency fund, I don't have any high expenses. I could sit on 10 grand and be pretty comfortable. And in the meantime, for the next year, I've been thinking about just taking that money and dumping like 15 grand, 20 grand at a Bank of Nova Scotia or something that pays these wicked high yields instead of, BNS only pays me like 2.3% on the interest rate for my high interest savings account. But for this, I'm like, man, again, is this bank going anywhere in the next year? No, probably not. Are they likely going to start lowering interest rates in the next year? Probably. Are these markets going to rebound? Are we going to start seeing the end of this horrific cycle? Probably. Am I taking on some black swan, perhaps event risk in the midterm if I do that? Probably. But the stock is down so damn much. I mean, it's 17% off its 5-year lows. I mean, we're almost back to some of the pandemic levels here. So it's just like I could collect a 6.3% rate, sit on it, forget about it for a year. It'd be pretty insane on 20 grand. I mean, that's an extra $1,200 a year versus the measly, you know what, $100 I'd only be making off the not even off the high interest savings account, maybe $500 in that same time frame, plus maybe some capital gain upside. I'd love to know what you think about that. Are you guys buying these banks? I think if you're accumulating them here, again, once we get through this rocky period, there's going to be some great gains to be had. But talking about the interest rate market, you know, the Fed is the one bringing down the market again. You know, interest rates went up. Here we go, folks, another 0.25% on the U.S. side of the border, which is basically a pretty intense hike because, again, it's the most they've seen in the highest level in 16 years. And obviously when rates go up, equities go down, U.S. dollar tends to rally. Is that what we're seeing? Yeah, on the last day here, we're starting to see the U.S. dollar gain a little bit of value. Not as much. It's starting to actually pull back now, but it did rally on the initial hike of the Fed. And the Fed is trying to stop people from spending money still. And we're just stuck in this environment, but we are starting to see the laggard half of this. Unfortunately, as mentioned, I thought we were in the eye of the hurricane, maybe probably about, I'm going to say 3 to 5 months ago when tech all of a sudden tanked. But now we're coming out on the other side of this hurricane where we're going to get the last backlash of it affecting real estate. So anybody with variable rates that have mortgage renewals coming up in the next, say, you know, year or two, because God knows the interest rate's not going to drop off by then. There's a lot of people, and we're seeing the real estate market still cool off. A lot of real estate prices have still potentially, you know, they're coming down a bit. I'm seeing it in my areas. Luxury real estate is selling for lower prices than where they were listed a year ago. So, you know, that's going to be the last wing of this hurricane. And then I can't foresee why in the next 6, 12, 24 months things don't start looking a little bit brighter. But a lot of this market and tonight is going to hinge on Apple. Apple is going to be the last defining factor of where this market goes because we've seen earnings come out of things like Starbucks. And maybe I'll just pull that up real quick because Starbucks is getting absolutely obliterated right now. I wouldn't say absolutely obliterated, but in the last 5 days it is down 7%. And they did post good numbers, but I mean, you're talking about a company that's trading for a 36 times multiple here. See some of the headlines. Starbucks stock got crushed after earnings. What to do with it now? Starbucks thinks as CEO sticks with the predecessor forecast. I mean, it's just an overvalued company in my opinion. It would have been great to buy these lows here. These coffee companies, anytime they dip, you buy them. McDonald's, Starbucks. I'm never utilizing them anymore. I mean, we pretty much gave up on going to McDonald's. I was never a Starbucks fan. I don't like Starbucks, too expensive unless we get coupons or gift cards. But I'm like Graham Stephan. I'm cheap as dirt. I mean, how are you going to build up a 6-figure account eating out at what was cheap fast food stores, right? But nonetheless, I really think, you know, Apple, this $2.6 trillion behemoth, and it, again, trading massively up above where it was. I mean, it's almost sitting back at its all-time highs, so it could really punch through here if those earnings turn out good. But we know that they're seeing a slowdown in MacBook sales by 50%. Again, MacBooks are a super small percentage of their total revenue. They're trying to compete with higher interest rates and get involved in the financial market, which is a great time for Apple to be doing that because people are already pissed off with their banks and their banks aren't paying nearly as high yields as Apple is. So this is like a 50-50 split. I'd be more confident betting on Shopify. Said I wish I did bet on Shopify, but you know, I gave up. I was going to throw 10 or 15 grand in it. I probably gave up on about $2,000 to $3,000 there. You know, again, 6-figure income. I'll make that up hopefully in a week or two. I guess it's my like judgment because I feel so bad. I slept on it. I woke up this morning. I was like, oh God, why didn't I gamble? That gambling addiction is strong, baby. That monkey on your back to make those bets sometimes when you don't do it, and it would have worked out. But all the other times you would have done something in it, and it would have been horrible. I mean, that's the kind of market we're in, right? But just, yeah, I'm going to keep an eyeball on Apple. I suggest everyone does tonight because it's going to be a very pivotal moment and what the S&P is probably going to do in the next day here. But outside of that, yeah, it's a mixed bag, man. It is a mixed bag. Most of my stocks, I'll do a portfolio update tomorrow. Now, when it comes to things like SCHD, my individual positions with VOO, SCHD, my Canadian stocks, they are going down. It is a time to be buying. I'm waiting on some paychecks, baby, from VDY. VDY is paying out May 10th, and I'll probably have another couple grand that I'll dip into maybe either the broader Canadian markets, or I'll just probably buy some more VDY too. If I can get my hands on some more SCHD, this is a good time to be doing it. Going down with the ship, going to keep buying these dips until I go broke. broke. Yeah, SCHD is trading, pretty down a little bit here. I mean, from $73 we're down to 69 just in the last month. 6 months we're trading pretty high off the peaks of around 77 for the last year here. But let me know what you guys are doing. Are you picking up any of these dips? Because this is the rare opportunity to do so. It might not be so rare if the markets really tank, but typically every time they dip like this, it's always been proven to be a buying opportunity since October. But I'd love to know what you think in that comment section below.